Hi everyone, we are pleased to be here today to present our report on the audit of fixed assets for DBC GV Company. Our team consists of 6 members. My name is Han, and joining me today are Nhật Phương Anh, Giang Phú, and Jin. Throughout this presentation, we will walk you through the key aspects of the fixed asset audit, including key findings and relevant accounting policies in the accordance with current regulation. We appreciate your attention and look forward to sharing our analysis and insight with you. Let's begin. In section T722, the original cost is taken from the fixed assets and depreciation table, specifically from the original cost item in the FA report. Fixed assets purchased during the year are listed on the figure in the addition section of the fixed assets report, while assets that have been disposed of the list paid on the figure in the depletion section and are recorded as negative amount. The beginning balance of accumulated depreciation is recorded based on the accumulated depreciation section in the FA report. Depreciation expense for the year are recorded based on the depreciation amount in the depreciation calculation table. The year and accumulated depreciation is based on the accumulated depreciation section in the depletion table. The same approach is applied to intangible fixed assets. Next is the G723 policy table. Based on circular 45, the depreciation period for each asset category are as follows. Machinery equipment is 5 to 15 years. Mean of transportation is 6 to 10 years, and management tool and equipment is 3 to 8 years. Other fixed assets 3 to 8 years too, and land use right depend on the land use period. Copyright under 20 years. We assess them respectively as follows. No for machinery and equipment, yes for means of transportation, yes for management tool and equipment, yes for the other fixed assets, yes for land use right, and yes for copyright. And so we have calculations in the accounting policy apply in the accordance with current regulation. So we have a conclusion. So we have conclusion. So we have conclusion. The accounting policy apply in the accordance with current regulation and are consistent with the period years.
I will present working paper D710, which summarize and analyze plan of fixed assets, construction in progress, and investment property as of December. Number 1, possible districts compare audited balance in 2015 with 2014, highlight adjustment and explain trend. Number 2, key fading tangible fixed assets expressed by 115% from 4795B to 4854B Việt Nam đồng. Normal addition After the partition, contribution in progress investment by 39% from 561p to 780p, likely due to acquisition or realization comment. Total balance grew from 608.9p to 8843p. Strong investment in long-term assets. Number 3, audit adjustments were made to Congress over depreciation. This March, TPPSVB confirmed with triple balance and supporting document. Conclusion: the company showed strong asset growth from consolidation progress on channel were reviewed and supported during an audit. Thank you.
Hello teacher, I would like listen to the detailed table of fixed asset recorded during the period. Line 1 for Ranger XLT with license plate 54 to 138AA. Record a small is 392,897,059 Việt Nam đồng. For with 219,276,131 Việt Nam đồng has been capitalized as a fixed asset. Line 3, Line 2, Toyota Race GL 5-seater license plate 52S 47AA. The amount is 318,888,889 Việt Nam đồng. Fully capitalized as a fixed asset. Line 3, record ST4422 photocopy with an amount of 32,500,000. However, this value has not been recorded under the asset section. The total budget amount is 744,285,948, with the total capital amount the fixed assets being 537,165,020 Việt Nam đồng. Their transactions are recorded with the debit to account 2113 and 3114 and credit to account 3141, reflecting the increase in fixed assets of the company.
Hi teacher, in final pack, I'm excited to share with you two key audit work paper, sheet D746 and sheet D747. This sheet focuses on tangible fixed asset and intangible fixed asset, important element in any company financial statement. They might seem technical at first, but they actually really interesting when you see how they work. Have you ever wondered how auditor ensure a company really out what it says there? Let me walk through about it step by step. Sheet D746, observation of physical inventory counts for tangible fixed asset. This sheet is all about confirm that tangible fixed asset actually exists, not just a number on a page, but a real physical thing For example, if a company claims it had 5 photocopies, but we only find 4, that's a problem. The aim here is to verify the existence of the asset. What did we do? Firstly, we joined the physical inventory count with the company staff. Secondly, we watched the process closely to make sure it was done properly, no cutting corner. And lastly, we checked the count result against the accounting record to look for any difference. We use the fixed asset inventory count sheet provided by the company as our main data source. What did we find? Sheet D746 include assets like Toyota Innova, A-Sitter, book value recorded quantity 1, counted quantity 1, land use right in Đồng Nai, book value recorded quantity 1 and counted quantity 1, key takeaway. There was no difference, everything lined up perfectly. Why does it matter? Develop the company record and accurate. You can trust that the car, land and equipment they list are really there. Sheet D747 examination of documentation for intangible asset. This sheet deals with intangible asset, things you can physically touch like software or website development costs. They are harder to verify because they not visible. Our job is to make sure they exist and are valued correctly. What did we do? Firstly, we check supporting documents like contract and invoice to prove the asset. Secondly, we compare book value with our verified value. And thirdly, we make sure everything follows audit standard. The data came from supporting documents provided by the company. What did we find? The sheet breaks assets in two groups. Opening balance asset, other intangible fixed assets were listed at 732 million, but our verification shows a value of 0, a difference. So it could mean the asset no longer exists or was valued incorrectly. New budget. Internal website development cost was recorded at 30 million and we confirm it as correct. No issue there. The new assets are accurate, but the opening balance had problems that need fixing. Why does it matter? It shows that record can have error. Intangible assets are strictly and mistake here could confuse shareholder. What do you think the company should do about this difference? Why are these sheets important? Sheet D746 group tangible assets like car and land are real, making the financial statement just worry. Sheet D747 point out an issue with intangible assets, showing the company needs to double-check its record. Fixed assets are often a big part of a company balance sheet. Mistakes here can mess up profits or asset value. It may if a company say it had valuable software that doesn't work. Investor and bank wouldn't be pleased. To wrap up, sheet D746 and sheet D747 are essential for checking fixed assets. D746 gives us confidence in tangible assets, while D747 shows an area to improve with intangible. Thanks for listening. This is the end of our presentation. Now, I would love to hear your comment.
This report presents reconciliations of fixed asset costs and depreciation between the client records and the auditor reconciliation. Summary of asset categories. tangible fixed asset divided into three main groups. First one is machinery and equipment. So there's no depreciation was recorded by the client. The next one is vehicles. The major issue found that some assets had incorrect depreciation periods. So all the vehicles had depreciation calculated over 6 years by the client, while auditor used 4 years. The office equipment, the notable discrepancies include that the photocopier record MB 1600 liter had the differences in cost recognition date, so it caused the variance in depreciations. The client, for example, the client is 1.63 million, but the auditor found out that only 1.3 million, so adjusted accordingly. The next one is Panasonic KXTA 616 phone system. The major depreciation gaps about 57.5 million due to incorrect useful life set at 3 years instead of 4. The land use rights that is Thủ Dầu Một, Bình Dương and Đồng Nai both correctly recognized, but auditor apply different amortization method, so it caused the depreciation difference of 28 million and 129 million respectively. The next part of intangible fixed asset, that is one item. They use accounting software pages, so the depreciation fully match between client and audit, so there's no discrepancies. So after the review and examination, there's no significant errors or discrepancies were found. There was a change in the asset increase dates for one type of assets, the record MB 1600 liters copier, which have been adjusted and verified, concluding that there are no errors. The objective is to identify inconsistencies, imbalance, and unusual pairing between the account and their corresponding account. So the account 211 tangible fixed assets, the reciprocal accounts include 331 account payable, AA 4593809 VND, and 811 other expense. 218,000 276 131 and 111 cash, 1121 bank deposits, and 2141 depreciations. So the notable points, that is the high matching value with 331 indicating asset acquisitions via account payable, significant reciprocal entry in with 811 suggesting potential abnormal cost allocation. Depreciation entry to 141 show the matching values but reappear again into 211, which is unusual and needs further review. So the total debit is 980 19,314,912, and the credit is 744,285,948. So the difference about more than 200 million, 236,028,964. So signaling a possible misstatement or unboosted offsetting entries. The account 213 intangible fixed asset with the reciprocal account 1121 and 331. So observations entry are perfectly balanced between debit and credit sides. That is 2,779,545,800 Vietnam dong on the both sides. No abnormal difference and imbalance were detected. So this section appear accurate and reasonable. The account 214 accumulated depreciation. Discrepancy in depreciation entry implies either over depreciation and or unrecognized depreciation expense, or a posting error between the main fixed asset account and accumulated depreciations. So this required conciliation with depreciation schedule and asset tracking reports. So for the recommendation, reconcile account 211 and verify whether capital expenditure and adjustment were mixed. Investigate the unusual presence of 811 and 2141 directly in account 211. Review the depreciation calculation and posting mechanism in account 214. Ensure that reciprocal entry across sub-accounts are fully matched and consistently recorded.
Analysis of D743 aberrants arrivals. One object ends when increase or decrease of physics assets in the currency year. It is citing properly capitalized and accumulated account. Number 2. Score of work examination 100% of physics asset increase, decrease during the year. Clients record cost with audit record cost. Identify specific reasons for any discrepancies. 3. Data use. This of physics assets transactions increase or decrease. Supporting document. Purchase invoice, liquidation report, comparison between clients and auditor cost record. 4. Research, total assets variance in 2060 approximately Vietnam dong 287 billion, a significant increase compared to 2050. Conclusions nói rồi. Analysis of D743 variants. One object, the primary object of D743 variants is due to ensure that both increase and decrease in physics assets during the current year have been properly recorded, capitalized, and disclosed in accordance with applicable accounting standards. It also aims to verify that such transactions properly supported by valid documentation and are consistent with company policies to scope of work. The scope of this produce include the following tasks: selecting on physics asset, addition and disposal during the year for examination, review supporting documents, including purchase invoice, approval, and disable records, verifying whether assets were properly classified and capitalized in the book, comparing the costs recorded by client versus and audit costs for each transaction, investigating and discrepancies and document the reason clearly. 3. Data use. The following type of data used to prepare the D743 variant analysis: detailed list of all physics asset transactions, relay documents such as purchase contact, invoice, payment, voucher, deposit, transfer note, internal approval from the board of director or evaluator, accounting, legal status, show client, recorded costs, and auditor review costs. Conclusion on transaction review found to be appropriately